Warren Buffett, the renowned billionaire investor and CEO of Berkshire Hathaway, is known for his wise investment strategies and financial advice. One of his most famous pieces of wisdom is to have someone else pay your bills. This simple yet powerful concept has helped countless individuals achieve financial stability and build wealth. In this video, we will explore 5 monthly dividend stocks recommended by Buffett himself that can help you pay your bills and potentially even cover your mortgage. Number 1. Motive Industrial, MDV. Motive Industrial is a REIT that operates and owns single-tenant industrial properties. Although it owns several retail and office properties, it is steadily selling those off to focus on the industrial sites. Among its most prominent tenants are Costco and Cummins. One of the unique things about Motive is that it was one of the largest non-listed REITs to be raised via crowdfunding before going public in 2022. It created a $535 million real estate portfolio and is the only public REIT that focuses solely on the industrial market. Its portfolio has 44 properties with an average lease of 14 years, which provides good long-term protection. The company is growing its portfolio quickly, adding $129.8 million in properties in 2023. Motive doesn't see the current environment as particularly good for acquisitions, and it is stated, "We take the Buffett-esque view that at this stage of the market cycle, we can afford to stand over the plate looking for that fat pitch without fear of strikes being called." The dividend of 1.15 a year, which is distributed in 12 monthly payments, currently yields 7.66%. Motive's dividend coverage ratio, which is the number of times a company can pay shareholders its dividend using net income, stands at 110%. While management has stated that it won't raise the payout at this juncture, it has made 88 consecutive distributions, with another one coming in the next few days. With adjusted funds from operations rising 19% from last year, Motive Industrial looks like a solid REIT to help pay your bills this month and beyond. Number 2. AGNC Investment, AGNC. Mortgage Real Estate Investment Trust, AGNC Investment, is an outstanding monthly dividend stock to consider investing in. It currently offers an attractive yield of 14.67%, which has been in the double digits for over a decade. Although the pandemic affected its yield, it bounced back quickly. The company's business model is straightforward. It borrows money at low, short-term rates and invests it in high-yielding, long-term assets, usually agency mortgage-backed securities. The best environment for AGNC is one in which short-term interest rates are low and moving lower. Such an environment allows mortgage REIT to borrow extensively with short-term financing, using the money obtained to build up a more extensive portfolio of longer maturity mortgage-backed securities. When yields on long-term bonds are substantially more significant than the rates on short-term borrowing, AGNC can make a substantial profit. Those favorable conditions have prevailed for much of the past decade, and AGNC's total returns have been good. The challenge that AGNC now faces is that those conditions are changing. The Federal Reserve has started to boost short-term rates, and the spread between mortgage-backed security yields and financing cost has narrowed significantly. Partially anticipating those moves, AGNC has shifted its investing strategy, requiring the mortgage REIT to reduce its dividend twice since switching to a monthly dividend distribution in 2014. So far, though, AGNC's share price has held up well compared to its peers, and despite the risks, many dividend investors are comfortable with a combination of high yield and long-term growth prospects. Number 3. EPR Properties, EPR. EPR Properties is a real estate investment trust that owns experiential real estate, such as movie theaters, eat and play venues, ski resorts, and gaming facilities. It secures these properties by signing triple net leases with the venue operators, meaning the tenants are responsible for building insurance, maintenance, and real estate taxes. The COVID-19 pandemic had significant impact on experiential real estate. Many of these facilities had to temporarily close their doors or operate at reduced capacity, and that impacted their ability to pay rent, forcing EPR Properties to suspend its monthly dividend in 2020. The good news is that most of its tenants have seen a return to business as usual over the past couple of years, and in some cases even higher demand for their in-person social experiences. The bad news is most aren't all, and EPR's largest group of tenants, the movie theaters, continue to struggle with revenues well below pre-pandemic levels. One of its larger tenants, Cineworld, which owns Regal Theaters, filed for bankruptcy in 2022 and is going through a reorganization. With more than 40% of its business tied to movie theaters, management is trying to reduce its exposure to this struggling industry. But there's still reason to be hopeful as box office revenues are improving, though still well below 2019 levels. EPR should be able to transition while supporting its dividend, but this represents a not insubstantial risk to EPR's ability to maintain its dividend. Number 4, LTC Properties, LTC. LTC Properties is a real estate investment trust that owns physical properties rather than securities. The name of the REIT indicates its focus area, which is investing in senior housing developments and healthcare-related properties that cater to the long-term care demand of the aging population in the United States. LTC's portfolio includes over 200 facilities specializing in assisted living, memory care, range of care, and post-acute skilled nursing services. The properties are spread across the country, covering the West Coast and Southwest, the Heartland, and the Deep South. LTC operates its facilities through joint ventures, sale and leaseback transactions, mortgage financing, preferred equity, and mezzanine lending arrangements in partnership with operations. LTC Properties has a long history of monthly payments since 2005. The REIT has increased its monthly dividend on 9 occasions over the past 13 years, resulting in an overall increase of more than 70% in shareholders' monthly dividends. LTC has a large potential audience that is expected to grow even further. Over the next 45 years, the senior citizen population is projected to double, and the number of people over 85 years old is expected to triple by 2050. Since the older retired population is more likely to require long-term care, this demographic shift could have significant growth implications for the REIT in the long run, as well as for its payout to shareholders. Number 5, Realty Income. Is an exceptional example of a company that embodies the concept of monthly dividends. The real estate investment trust has even trademarked its claim as the monthly dividend company. Its shareholders have seen the benefits for decades. Realty Income has paid 574 consecutive monthly dividends, and the REIT has increased those monthly payments for 82 consecutive quarters, more than 20 years, with an average total return of almost 16% annually and an annual dividend growth of nearly 5%. Realty Income delivers reliable monthly income to its shareholders. Realty Income achieves its dividend distributions through a diversified portfolio of real estate holdings. The REIT has over 5,300 properties under long-term net lease agreements, which places tenants responsible for paying for particular expenses such as property maintenance, insurance coverage, and real estate taxes, resulting in a more reliable and predictable net income stream for Realty Income. Realty Income has secured more than 250 commercial tenants to lease its properties. Although the REIT has a retail focus, it has tenants in nearly 4 dozen different industries. Realty Income also has fitness centers and movie theaters among its key tenants, taking advantage of the trend towards greater provision of services at commercial property locations. Focusing on retailers that offer low prices to their customers also helps to reduce disruptive risks from online competition. With such a long history of success, Realty Income has the experience and expertise to navigate changing trends and find ways to provide the monthly dividend income its shareholders rely on. In embracing Buffett's wisdom of having someone else pay your mortgage, investors can explore the world of monthly dividend stocks as a means to achieve financial independence. By carefully selecting reliable dividend-paying companies across various sectors, individuals have the potential to create a passive income stream that covers monthly bills. As with any financial strategy, diversification, due diligence, and a long-term perspective remain key elements in pursuing financial success. We'll see you on the next video. Thanks for watching.